Yo, what is going on, my friends? It's your boy Jdun, Trades with Team Bull Trading, and I hope you're all having an amazing day. We are live and back in action with part 3 of our Trading from Step 1 series, our free beginner trading course for all things day trading, swing trading, and learning how to trade in the stock market. Now, I want to say this. If you haven't seen part 1 and 2 yet and you are a beginner, I highly recommend you either A, finish this video and then go back and watch those, or go to the playlist on my YouTube channel. I have a dedicated and organized playlist just for you guys to go through the videos in order and not have to search the whole channel. Now, that being said, I teach for free every single day, but these videos are uploaded on Saturdays. Every single Saturday, you can expect a new one to add to our series and to teach you how to trade. So if you want to follow along with that, and if you'd like more daily free education, make sure you guys hit that subscribe button below. Hit that like button if you want more videos just like this. Comment what you want to see next, some things you're struggling with, and let's get rich together. So let's start from here. Let's go over our agenda. We have a few things that we really want to touch on today. Number 1 is an introduction to chart patterns. In the last few weeks, we went over broker setup, we went over what are options, we went over some basics of candlesticks, and we've really dove into the absolute basics. And now we're going to head to the charts, head to some things we need to look at with support and resistance. What are chart patterns and how can you use them to make money as a beginner or an intermediate trader? So we're going to go over that. We're going to do a support and resistance overview. What are support and resistance? Are they supply and demand? And how exactly do I use them and should you use them as a beginner trader and someone who wants to make money in the stock market? We're then going to go over continuation versus reversal patterns. What are the difference? What are some good ones that you can watch out for? A chart pattern list, some of my favorite patterns and some most recognizable and respected patterns in the industry. And then, as I just said, my favorite chart patterns with some examples. So first on our docket is support. Think of support as your floor. If you kick the floor a few times, your foot will probably bounce back up. However, if you kick the floor hard enough, you will break through and likely go way down. Support is the same exact way, right? Think of your support as your floor. You kick it once, kick it twice, kick it 3 times. You probably bounce back up. Maybe you never come back down. But eventually, kicking that floor enough times, touching that level enough times down, you're going to break through and it's probably going to be violent. We'll go into more of that later. Now, support, also known as demand, is what prevents a stock from falling. Buyers are not letting this price drop. Once this level is taken over, the stock can begin to fall rapidly. We see this happen all the time on bigger time frames and also smaller time frames. More on that later. Now, on the flip side, we have resistance. Think of resistance as your ceiling. Just like the previous for example, if you punch the ceiling several times, it will likely reject with some pain in your hand. However, if you punch it hard enough, you will break through, likely going way up. Now, same idea as support, but in the opposite way. Punch the ceiling once, nothing. Twice, nothing. Maybe you don't go back up. Maybe your hand's in too much pain. But eventually, if you punch that ceiling hard enough, if you have enough momentum, you're going to break through and it's probably going to be violent. Resistance, also known as supply, prevents a stock from rising. Sellers are not letting the stock go up. Once this level is taken over, the stock can begin to rise rapidly. And I just want to say that there is traders, myself being one of them and many others, that make 6, 7+ figures trading basic support and resistance, applying price action, and knowing what to look for with solid risk management. So I want to tell you guys this is so key. Learn these concepts I'm about to teach you, build on them, and you will have a solid foundation for finding success in the stock market. Now, how do we identify support and resistance? Well, we want to start with higher time frames, such as the 1 day to the 1 year chart, and work down. Now, I typically like to start in the weekly chart. The weekly chart is where you're going to find most of your big macro trends. Then we go to the daily chart. Then we go to the 4-hour chart, the hourly, and we work our way down, right? Starts big, works small till we get to that fine point, which is going to make us money trading. Now, this is extremely important as many times the bigger time frames reveal large, more explosive levels. The more people that are seeing a level, the more people that are participating, the more explosive the level is going to be, right? And obviously with bigger time frames, it's bigger, more people are going to be seeing that big level than, versus a 1 minute or a 5 minute chart. Super important to know as a beginner. Now, support and resistance can also be price zones, not only exact levels. That's where we get into supply and demand. Basically the same thing, right? Supply is your resistance, demand is your support. I like to refer to as the demand as the zone. Like, let's say support level is 100, but we could have a demand zone of 101 to 99. They basically mean the same thing, that we're going to come down, buyers are going to step in, and we likely bounce back up. That's what you're looking for. versus resistance. Resistance level could be 100 too. Resistance is 100, but our supply zone could also be on the flip side. If we're below it, 99 to a 101, that's our whole supply zone, but it's not technically our resistance because resistance is a level. Depends how you look at it, basically the same thing. Now, these become each other when broken. This is the biggest thing that I use in my trading. Now, aside from price action and risk management, let me make that clear. I love retests. I love breaks of support and retests back down. I love breaks of resistance and retests back down. So let's say we're going up, we're at 95 and 100 is our resistance. We break through 100. Okay, I'll show you some examples of this later. Break through 100 to 102. Now when we go back down to retest 100, many times you'll see buyers step back in there. You'll have a little profit taking at that 102 and we'll find a new support from a broken resistance around that 100 area. Same thing goes for support. If support's at 100, we're at, let's say, 102. We break below that 100 support, go down to 98. Now we're going to look for a reject around that 100 area because it has become our support turned resistance. Super easy thing to use, super easy to recognize, and something that is a game changer for many traders when you learn to watch price action and find those exact levels. Now, with that being said, the more times a stock touches support or resistance, the more explosive a potential move becomes. This indicates pressure is building up to break that level, and it will be explosive when it does. And like I said earlier, the bigger time frames usually equal bigger, more explosive moves. Now, with that being said, I wanted you guys to have an overall understanding of support and resistance because it's going to play a big role into what we talk about with chart patterns. Now, in technical analysis, transitions between rising and falling trends are often signaled by price patterns. By definition, a price pattern is a recognizable configuration of price movement that is identified using a series of trend line and/or curves. When a price pattern signals a change in trend direction, it is known as a reversal pattern. A continuation pattern occurs when the trend continues in the existing direction following a brief pause. Technical analysts have long used price patterns to examine current movements and forecast future market movements. So in English, what this is saying is chart patterns are basically like finding trends, right? You're looking for commonly seen patterns by overall markets and traders to find that trend and get ahead of it and make money off it. So the psychological side of chart patterns that I need you guys to really implement. This is so important. Before we move on to continuation patterns, we have to talk about this. Is that I don't want you guys going into trading. I don't want you trading every day looking for falling wedges and rising wedges and triangle this and pie this, that, number this. That's not what I want you guys doing. I want you guys looking for the trend. What is this pattern telling us? What are these consistent higher highs and higher lows telling us? What are these candlesticks up and down telling us? Is it telling us that the market is bullish, that psychology says buy, or is it saying psychology says sell? So I want us to change our mindset from looking and trying to see, oh, could this maybe be a reverse wedge or a falling wedge, or could this be a pennant? No, we want to look for trend and we want to look for price action. And that, my friends, is how you're going to use these to better yourself trading. So continuation patterns, what are they? A price pattern that denotes a temporary interruption of an existing trend is known as a continuation pattern. A continuation pattern can be thought of as a pause during a prevailing trend, a time during which the bulls catch their breath during an uptrend, or when the bears relax for a moment during downtrend. While a price pattern is forming, there is no way to tell if the trend will continue or reverse. As such, careful attention must be placed on the trend lines used to draw the price pattern and whether the price breaks above or below the continuation zone. Technical analysis typically recommend assuming a trend will continue until it is confirmed that it has reversed. Couldn't agree more. In general, the longer the price pattern takes to develop and the larger the price movement within the pattern, the more significant the move once the price breaks above or below the area of continuation will be. So basically, we're going to go over some continuation patterns in just a little bit. But when you have one of these, you're looking for, let's say we've been in an uptrend, we come to like a symmetrical triangle, which is a continuation pattern. You want to see that continue in that direction. That's where your probabilities are going to be with these types of patterns. So they help you realize, okay, the previous trend is going to continue. With that, these are some continuation patterns that I will typically look for. Now, I want to go on record saying that my trading strategy is not finding falling wedges or bearish rectangles and bullish pennants. That's not what I do, okay? Or the vice versa. These work both ways. My strategy is looking for these, finding trend to to verify what I'm seeing, and so that I can look at price action. I can look at candlesticks, find my entries, and make money and execute. So I added these for you guys to look at, for you to save, for you to screenshot, and come back later so you can find these, learn how to identify them, and use them to your best benefit. Now, I also want to say these are available on any time frame. Now, typically I like to find these on like 5-minute and 15-minute charts. I've also seen many instances where we see like a falling wedge or a rising wedge on a weekly or a daily chart. I've seen that before too. So falling wedge, excuse the old example, on plug back in its glory days. We see the lower lows here, right? We see this coming down to wedging here. We come up, we break and retest. Now I wanted to touch on this for a second too, because this goes with our support and resistance example we talked about earlier. We break this trend line, right? Which has been serving as our resistance. We come up, we come back down and retest this right around here. We retest, we come higher, and eventually use this trend line as our bounce spot and have a massive move up. You see this happen all the time in many different stocks. So this resistance right here, that's what this line stands for, is now our support when we break through, come back down, retest this, and have an explosive move. Key to remember. Bullish rectangle, we see this. We come up and down a few times, consolidate after a big move up, and then we make that next move to the upside. This is basically giving bulls a second to breathe before we continue the pattern upwards. Now, you wouldn't want to be trading this chop, but once we break through, this gives us a nice reference to continue forward trading. Next is a bullish pennant. This is something that I have hardly used, if at all. I mostly look at this for consolidation, and I would consider this like a symmetrical triangle, I guess you could say. We'll go over that in a little bit too. But we slowly come down here. We finally break out of a little move down and a big move up. Next is a rising wedge. You can see we're coming up. We're getting tighter and tighter up to here. We finally break down and break out of this. Now, one of the things that I don't like about chart patterns and like trading just off these is that, for one, I don't know any multimillionaire traders, including myself, that just trade like wedges and pennants and stuff. Like, I'm watching price action. I'll use these for reference and trend, but you're going to spend way too much time trying to look for chart patterns and decide, is this one, is this not one, getting the entries wrong and all that. So we're going to try to fix that throughout this course. Next is a bearish rectangle. Come down, consolidate, make that next move down. Pretty straightforward. And now we're on to one of my favorite chart patterns that I do use intraday. However, it is not my edge, and that is a bull flag. Now, a bull flag, as many of you, if you've been trading for more than like 2 weeks, you've probably heard of this. We come up, have some lower lows right here, some lower highs right here, but we maintain a tight range here. When we break this resistance here, that's when we typically like to get in. I personally like to get in on this retest down or at the bottom of this range with tight stops. My favorite entry on bull flags is coming up, breaking this, retesting right around here, and then ripping back up. On the vice versa, we have a bear flag. You come down, we keep a tight range here, break below. My favorite again is we come down, break the support down here, come retest up here, then we take the puts to the downside. That is my favorite setup for there. Now, I put this in here so you guys could see. I found the screenshot very helpful with how to analyze bull and bear flags. I'm not going to go over it too much, but what I talked about is here. I like that entry point here. We come back and retest this right here, and then a massive move up. Vice versa, break below, come retest, and then come back down. Now, bear flags, I've found they work on any time frame, but for myself using them, I like finding them on the daily chart, so it gives me that trend idea. And I also like using them when I'm watching intraday on the 5-minute chart primarily, and then sometimes the 15-minute chart. I do not use them on the 2-minute chart or the 1-minute chart, strictly those two time frames intraday, and then for trend on the bigger time frames. So reversal patterns, what are these? A price pattern that signals a change in the prevailing trend is known as a reversal pattern. These patterns signify periods where either the bulls or the bears, bees, grammar, have run out of steam. Geez, my grammar was not good this day. The established trend will pause and then head in a new direction as a new energy emerges from the other side, bull or bears. This is saying, hey, this trend might be running out of steam. It's time to reverse and go the other way. Now, some solid reversal patterns you can find here are double tops or double bottoms, head and shoulders on either time frame, or inverse head and shoulders, and then rising or falling wedges. So can be used depending on the time, depending on the place of the stock. These can be used as these as well. So again, out of these, I'd have to say that my favorite setups are probably these double tops and double bottoms. These I see play out the most on the daily charts, on the weekly charts, and sometimes even intraday. Now, I'm very hesitant on using these intraday. I like these on bigger time frames. I think it's hard to spot head and shoulders, so I don't really use them. I mean, if we had a perfect one, I would use it. It's just not really for me. My favorite of all these, because of the psychology behind them and how easy they are to see, are double tops and double bottoms. Now, bilateral patterns, these are probably my favorite. Of all patterns in the stock market, these are my favorite. Why? Because they're such trend patterns. An ascending triangle, what is this telling us? We're not looking for a triangle here. We're looking for higher lows with a set resistance. So when we break that resistance, we likely see that nice move up or that retest down and then move up forward. Descending triangle, what is this telling us? Saying we're making lower lows here. We're very weak. Every time we come up, it's at a lower price. So sellers are clearly in control. So when they can finally break the set support down here, we have a nice entry to the downside, or again, our retest here, and then a move down further. Now I want to come out and say that on both of these trend patterns, bullish, bearish, we can go the opposite way, but the probabilities here are likely going to be to that move in the direction of the trend. They can go the other way, as you see here, but it's less likely and less in your favor, just so you guys know. Now, symmetrical triangle, this can go either way because you're making lower lows, but you're also making higher lows. So this could break, up here, or it could break down here. There's really no edge in this either way. Or it could be a continuation pattern where we come up. If we've been bullish on the day, this is going to lean more bullish. If we've been bearish on the day, this is going to lean more bearish. You guys have to remember these things when you are trying to trade chart patterns. Now, an example of an ascending triangle. Okay, we're making higher lows. We're holding this resistance. We finally break through, have like a 10-point move up. Obviously, we end up coming to crash down. So if you held through this, probably wouldn't make money, but on this 10-point move up, if you're trading options, you should have made a very nice bag. And this had more teeth to it because this was on a daily chart when we were watching it. It showed trend, kept making these higher lows, ended up being a nice setup and a nice example. Symmetrical triangle. Come in, we're making lower highs, higher lows. We finally break up, come back down, test this trend line, and then have a nice move up. Perfect trade. You'll love to see that. Now, my favorite patterns, and again, let's touch on the psychology of patterns again. My favorite all-time setup is going to be the opening range breakout and the retest. You see this happen all the time. We'll go over how we saw this just in the last few days as well. We make this high here. We come back down. We retest this. That shows that sellers tried to push us down. Buyers said, nope, push us above. Now, I won't take this breakout right here. I will never take this breakout. I did in 2021. I don't in 2023, and I didn't in 2022. Why? Because our retest is where we want to get in. This is our highest probability with the least amount of risk. So we come, test it here, get in here. You see a nice move up, come back down, retest it again. No clear stop. We don't come down to this 110 area. We don't close any candles below. And then we have a very nice rip all the way up, like a 10, 15-point rip all the way up. You love to see that. This is a textbook 5-minute chart, 15-minute chart example. This is my bread and butter. One of my bread and butter strategies. I love this. You love to see it at any time in the day when you have a set resistance broken, turn to support, especially with this big candle up here. A lot of times when we have this big movement, we want to come down to that reference point, fill that spot here, fill these orders, and then rip up. One of my favorite setups. Now, keynotes of the orb. It's applicable on the 1-minute and the 5-minute time frame. I like the 5-minute the most, sometimes the 15-minute, but 5-minute is going to be your golden zone. And we like to make our high the first candle and then have 10 to 20 minutes before reclaiming. Valid on strong stocks. Now, this goes both ways. Now, you can have this orb to the upside, or if we flip this chart upside down, this could go to the downside as well. Both ways are valid on this setup, okay? Next is the ABCD. Now, this requires using VWAP. I like another level of support or resistance. It goes both way in some instances, but and this also has the 8-day EMA. So what happens here is you have a big move up. This is point A. Point B is up here. You have a little profit taking. Point C is that higher low in the uptrend. You want to take calls here with that VWAP support, and ideally get that nice move up, nice day trade up to the upside. Vice versa, if we flip this upside down, this can also go to the downside as well. You move down, you'll have a little profit taking, find that lower high, and you make that move to the downside, capitalizing on that as well. So that is my run through on chart patterns, right? Very simple. I'm not going to sit here and try to tell you you're going to get rich trading chart patterns, because the way you're going to make money long-term trading from someone who's been learning for 6 going on 7 years and has learned from some of the best traders ever to do it that have made millions, you're not going to make money, you're not going to make consistent money only trading chart patterns. You're going to use them as reference for your trend and for your trading, but your job is to use those, help them solidify your edge, but your edge is going to be price action. Your edge is going to be finding things that work for you, not trying to guess if things are wedges or pennants. So now we're going to go over to the charts for a second, go over a few more things there, and get you guys right going forward for next week's part 4. Let's go. All right, so I want to start with today's price action and a few things that I saw that were very helpful for what we're teaching in this lesson. Now, if we look at this, right, if we look at this price action today, we started off the day making lower highs and lower lows, right? This is technically bearish, right? We see this, but I want you to take a second and look. We had this resistance up top. We had this whole area forming. This kind of looks like what? A bull flag. We come up, we're flagging down. We break this through. Now, catching this entry here is hard. Now, if you're in the Team Bull Discord, I'm not here to talk about that. We don't talk about that on the series. Brandon called a nice entry right here on SPY for calls up because it was on the lower end of this channel with a stop, with a close below 413. Beautiful trade. Now, on the flip side, if you didn't catch this, my next entry wouldn't have been here. We come up, where would I have had my next entry? When we come down and retest this channel right here, this resistance turns support, and what happens? We come down, we retest this beautifully and see a massive shot up. Exactly what I was just telling you guys. Now, one of the trades that I did take today had a nice $18,000+ day, was a reject on SPY right around this 1230, 1225 mark. So I was looking at this, we came down and we had this big support right here around 416 to 415.5. So I saw us come down, we had reversed this downtrend, came back down here. And so when we break support, what happens? It turns to resistance. So I was looking for that, saw that if we broke this down more, we'd likely come back to 415 to 415.5, come up, reject, and then have a further move down. Exactly that happened. I entered right around here, around this like 415.5, 415.2 area. We saw a nice move down, failed to come back up, and then saw a further move down here. Cleaned a nice $4,000 just on this trade because the contracts moved so nicely. Now, what I want you guys to understand is that using these basic principles of support and resistance, supply and demand can take you a long way. I don't want you spending all day looking for different time frames. Oh, could this, be a potential ascending triangle, or could this be this? Like, that's not what's going to make it for you. You want to find these levels. You want to find these solid setups. You want to mark your supports and resistances, and then you want to make sure that you are learning to execute on candles. Another good example from yesterday. Again, this was news-driven, so I'm a little tougher, but resistance here at 406.5. Come back down, we break this. We have a small retest back down to 406.7, like 20 cents off, then a rip back up. So I would never personally recommend anyone to take these breakouts here. No matter what the pattern is, you wait for the retest down, you wait for confirmation, and then you go. See the same thing here. I actually ended up taking this trade too. This was nice as well. I was watching this, told the team this level. We broke through 409.5 to 410. Came back up. We come and retest this after these big moves up. What happens then? We get long here. We keep the bottom of this wick as our stop loss, nice and simple, and we see a nice $3, $4 move up. Beautiful. Like this is, I'm telling you, that is how the pros are trading. They're looking for big liquidity zones. They're looking for big areas. They're trading like smart money. Right? They're trading when people are fearful. They're buying the dip, and that goes both ways with puts and calls. They're not chasing tops. They're not getting burned on tops, right? And there's going to be times where buying this dip doesn't work. Buying this zone doesn't work, but that's why you keep tight stops. You don't trade off just pennants and wedges and flags, but you watch price action. You use the wedges and flags and stuff as reference for you and trend, but you watch price action. That is the key. That is what I teach every single day on this channel and what I want to see you guys do to win. This is a no BS channel, right? I'm going to tell you what it takes. I'm going to tell you this is hard. Trading is super, super hard. It takes a lot of screen time. You got to be watching these charts every single day, these 5-minute charts, these 15-minute charts. I want you guys watching these over and over and over again and watching how price reacts, watching how these candlesticks react. And that, my friends, that is how you're going to make it. So that is going to conclude our part 3. Chart patterns, support and resistance, all that good stuff. And that is what you need to take forward. Practice these simple concepts. Watch the 5-minute chart. Watch the 15-minute chart. Use your bigger time frames to find your levels. Hourly is my favorite personally. The daily chart. And then break it down and find your levels and your entries and stuff on smaller time frames. So all that being said, God bless. Make sure you guys hit that subscribe button. Hopefully these videos are helpful. I do them for free with no upsell or anything. I just want to see you guys win and have a nice free place to start with solid education. So God bless. Team Bull forever. See you guys in next week's episode. Peace.